All right, everyone. Welcome to the Sunday night charting session. Just like always, I'm going to go through the usual stocks that we tend to go through every single week, even if they're not brought up by people. They tend to be the bigger portion of the index for the S&P. There was a few that other people have listed and or have messaged me privately about looking into, but we're just going to do the same thing as usual, alphabetically, starting at the top, working our way down during the entire recording in the class for this. If you guys have any other stocks, even midway through, at the very end, even right now that you're thinking of that you don't see on this list to the far right on my watch list, start typing them now. And I'm pretty sure with what I'm expecting to do with time frames per stock I want to go over, we should have about 15, maybe 20 minutes max left to talk more about like deeper market sentiment, maybe overall stuff outside of support and resistance. So we'll go ahead and get started. So obviously with Apple, they just had earnings. Everything came out smooth. We had a major gap up after the Thursday after hours earnings, obviously. And just like I talked about last week, the major level that I'm focused on is that 175 as a rejection still. And that is also going up against the previous lower high if you're looking at this zone right here, which is obviously, I always tell you guys, don't chart to a decimal. Always focus on a zone and wait to see how the stock reacts inside that zone. Most stuff will not reject to a decimal off of historical charting when you use supply and demand. So when going off the previous lower high, 175.59 was obviously the high of this area, but I'm more so focused on the psychological number. I want to have a rough idea of a zone. So usually what I do, I find the high from that area and then basically round down to like the 175 a share. So a zone between 175 and 175.6 area, I'm heavily focused on for a reject. Obviously, if the market does come in super heavy this week with buying pressure, I would not obviously be opposed to the fact of this reject is not even going to contest. It's just going to fly right through. So if we're looking at more of an upside, that is when I'm looking at the before lower high that happened after the all-time high. So if we're placing the zone roughly in this area, I would be putting one around right there around 177.7 a share, 178 a share. Anywhere in that area, I will also see a reject on the larger gap fills that should happen. I don't want to put multiple levels in between 175 a share and 178 a share. I'm looking at the gap fills. I'm not too worried about every 40 cents in between, every $1.10 in between. I'm like looking at the bigger time frames for the bigger gaps. I'm not worried about the 5 minutes with the gaps being filled. I want to play basically patience along with low risk, high reward. So if we're looking at Apple for a pullback at this point as well, obviously the biggest thing you want to look at in the current times that we're in is the heavy resistance before the breakout. And if we're going off a level at that area, we're looking at roughly 170 a share for a pullback if we have that, obviously. The previous low I had at 167. I'm going to keep that level there only because if we do break the 170 a share on the support, I do expect us to have another pullback to the larger gap fill, which would be around 167 to 168 a share, going off the previous higher highs off this rising wedge that we have. So when focused on these zones, just like I tell everyone with patience, low risk, high reward, I'm telling you how I trade, how I prepare, and how I wait for setups. If you have a different philosophy you use, you chase the breakout with calls, you play the breakdown and get puts at the bottom, you can do what you feel. But as I teach, I'm going to explain what I do to keep my emotional standpoint minimum, what gives me the highest reward so I don't have to worry about the risk associated. I'm always looking at the larger frames. So if I was playing Apple, I would obviously be looking for a pullback to the 170 a share to get calls. And if I want to try and play puts on the downside, obviously, I'm looking for rejects on the resistance on the upside. I'm always looking at the vice versa that most people may not do. New traders are kind of in the mental capacity of when a stock's booming upside, they want to get in calls before it's too late. They're going to miss the move. I tend to do the opposite. When people are wanting to chase the play, I'm waiting for the rejection to try and get puts once I see that consolidation hit with selling pressure over buying pressure. So the main four levels I have here with Apple, obviously the very, very bottom support around 167 a share. The closer support that I expect to hit this week if we do have a pullback is going to be roughly 170 a share, which was also this previous rejection zone before earnings popped us back above it. And then looking at resistance on the upside, we have 175 a share and then 178 area a share. I'll go back to the daily real quick just to show you guys the larger picture as to why I'm saying these areas. The orange level is obviously the previous lower high, and then the yellow level on top is before that lower high. That's the other trend line that happened after the all-time high hit with Apple back in early 2022. I don't usually do this, but since that was pretty quick, I plan on doing that speed with the rest of the stocks. Do you guys have any questions or comments about why I have those levels? Maybe you're curious as to why I'm looking at calls at the bottom, puts at the top. Now is probably the best time to start maybe being involved if you want to ask questions. I'm going to talk the same way and probably the same pace the rest of these stocks. And that's why I plan on having about 15 to 20 minutes left at the end of this class to maybe talk with you guys, maybe discuss strategies going into the week. I know we have CPI and other data reports coming out. So along the way, if you have any questions, just type them and I'll answer them when I see them. So now I'm on AMD. For those of you that may not know, AMD had a news partnership with Microsoft, and that's why we had this major push. I'm going to go to the smaller frames just to show you this on a smaller candle wick. I'm on the 30-minute right now. On Thursday, AMD and Microsoft, there was news that came out with Microsoft doing something with AMD with their, whether it be technology partnership. I didn't get too deep into it, but I heard about it. Obviously, not many people are going to expect AMD to pump almost $7 within a 30-minute candle. So that's the reason why I brought this up. I want you guys to understand why it's pushing, not just the fact of a support zone held and it's pushing upside with buying pressure. News came out, and this is going to be a good teaching experience for a lot of you that may not understand this. Multiple stocks, along with the correlation into the market makers and Wall Street, or just the big boys that put in the most money, a lot of zones will correlate with news outlets that are going to release something at some point. And they try and time it at the point of maybe a major support's broken, and that's when they release the news that may have been in the vault for a few hours or a few days. It's always like planned. I don't want to say like the news came out, that's why it pushed. If you're focused on the idea of AMD, once we had that major break on the downside, news came out the very next day, and that's what pushed it back up. When looking at that zone that we had AMD pull back to after the break on the main support, which was around 83 a share, 84 a share right here. Look at the fact of all this buying pressure and rejections that happened previously. A lot of news is always set up within the charts, and a lot of people don't tend to look at the major time frames that catch that. The news tends to push it. Their main assumption is, oh, news is what's pushing AMD. That's why it's back up. Most news correlates with heavy supply and demand zones. So someone just said on the 4-hour, would that be considered a cup and handle for AMD? So you're focused on like this right here, correct? Basically the past week of movement. Is that what you're looking at since basically the start of May? Or are you looking at the overall formation that's happening right now? CJ, my bad. I should have said your name. Okay, yeah. So you're looking at the bigger picture. So this would be considered the start of a cup and handle. Obviously, there's not enough evidence that this is going to happen. If you're focused on the overall direction of this going out the way it should, the biggest thing that I try and tell people to focus on, there's going to be a pullback coming. We're forming this cup, we're getting the base going, and now we're curling back to the upside. At this point, I usually look for a pullback to make a higher low going off where the lowest form just hit. So if we do consider this a cup and handle, we have the base here, and at this point, I would expect a pullback. I don't know where the pullback will be. News could push this without bringing it back down, but you're looking for trends that reverse to the bullish side with higher lows at this point. And this is not going to be accurate, but just for a visual for people that may not understand what I'm saying, act like this is the formation that's going to start forming now. We're looking for this pullback. I'm going to delete this line so it's not confusing. This rising wedge of higher lows and higher highs now to pull this cup back to the brim at the top side. And I saw a question, someone said, do you trade futures? I have dabbled in futures. I don't currently do that, but I do mostly just focus on options. If ask me another question about why you are curious about that, and maybe I can elaborate more. I know a lot of people that trade futures. It's the same exact thing as options, but just take away the IV, the theta. Everything's just straight like trading shares on stocks. You're buying at a specific point on the price action. and that is the entry. There's no time decay. There's no IV. It's only basically you buy at this price. That's your entry. There's no like separation with shares and contracts. Futures is literally the same as buying shares, but I do not personally do futures. If you want insight on that, I do know a lot about them though. So if you do have more follow-up questions, please don't be scared to ask, and I will give you as much information as what I've dealt with personally while doing that. And hopefully I can give you answers you may want. So going off the AMD setup right now, the biggest thing that I usually tell people, it's not the fact of, okay, we're pushing back up, this is going to be bullish now. AMD had a news release that gave it that buying pressure. Is this buying pressure enough to not give it a pullback? Is it going to have continued strength of just buyers at this point? I'm always focused on a pullback to load calls. I don't want to chase the move because at this point, I know people that got into AMD back here in this area. I know people that got into AMD back here at this low. So they're already in the move. I don't want to get in calls after the move happened. I will only wait for a pullback for the way I trade with low risk, high reward. So at that point, I can keep the same levels that we had last Sunday when we charted AMD. The biggest support that we have is around $85 a share, up to $86 a share. The next support, which is going off the current price of around $90 a share that it closed at on Friday, I have a support roughly at $88.50 a share. We still have the main breakout of AMD at $91.50 a share. The biggest thing that I will tell people, if we break this $91.50 a share area, we have a major gap to fill, whether it's a pullback with heavier, higher highs, with higher lows on the downside. We're going to run with AMD. NVIDIA has been hot. Tech has been hot. AMD just got news with Microsoft involved. This could be setting up for a major bull run back to $100 a share, maybe even higher if it breaks that main rejection at $102 a share with this cup and handle that could be forming. So when discussing AMD, my only thoughts is if this can pull back and I see it to like form that higher low, I'm looking for a higher low to form after it just hit the low. I want to see a new support hold somewhere, whether it's at 88.5 a share, 85.8 a share. I just want to see a healthy pullback that has buying pressure. That's what I would be looking for if you're bullish on AMD. If you're bearish on AMD, watch that $91.50 a share. If we break out above 91.50, use the previous lower highs as we form this downtrend from the 102 rejection. So at that point, you have these levels forming. Use those previous zones or trends to use that for other things. Someone just said pull back to form a higher low than calls with time and type stops. So yeah, definitely. The strategy that I like to use, add time to contracts, play right at the money if you can afford it, and trust the trends. Let the trends guide you. Don't let your emotions guide you. If there's heavy buying pressure on a pullback for AMD, you can low calls at the money and let this go if you add time to those contracts. I would not be surprised if AMD can touch the top of where this cup is at 102 a share. I would not be surprised if that happened this week or even next week. So I'm going to switch over to Amazon now. I'm going to stay on the 4 hour only because I feel like you guys should understand the daily right now. There's no other movements that happened since last week. Everything's still sitting in the same spot. The earnings pushed it up right away when the results came out, then it dumped right back down. Amazon's trying to find that next support to make that leg up. So the 4 hour is really all we need. And all the previous zones that we've talked about on Amazon are still in play. So there's no new charting I have to do. If you guys want me to talk more about the stocks that I don't have to readjust levels, I will, or I can just come back to them at the end of this session. I don't want to spend too much time just repeating what I said last week. A lot of people that I've noticed that come into these classes, they are here every week or every day that these are scheduled. And I don't want to just talk their ear off. But if anyone individually was not here or they just want to be alliterated on what Amazon's doing off of my perspective, I can do that. But just going off the levels and obviously the 4 hour trends we're on right now, we're still making higher lows off these trends. We're still holding this rising wedge, the higher lows, higher highs on the trends. Can that buying pressure hold if we have pullbacks? That's the biggest thing to focus on. The main support I have is $103 a share. I'll give another level below that just in case we do have a weak start of the if we have a slow buying pressure start of the week. I didn't want to use the word weak twice. So if we do have a pullback below $103 a share, focus on the previous higher low right here. That is the zone you're going to be watching for a double bottom. And I'll make this color blue just so it is easier to see. This previous higher low at $101 a share is the main support if we break below $103 a share. At that point, going to the upside now, we're currently at the main volume gap around $105 a share with Amazon. If we can hold, or say we break below $105 a share and pull back to the upside above that zone, we have two main resistance that I'm focused on. It's going to be roughly $108 a share. And if we break above that, obviously ignore the earnings report wick right here. None of this matters. The only thing that does matter is the high of that wick. Outside of that, if we break $110 a share at the main resistance, we are going to have a gap fill, whether that be the wick back here or the earnings report wick. There we go. So we have $117 a share and then also $123-ish a share. But just realize before we even contest either of these levels, we have to focus on what's going to have to pass on the way there. We have to hold $105 a share. If we hold that zone, we have $108 a share that has to break on the upside. And then we have $110 a share that has to break on the upside. And once again, I'll repeat the supports. The main support for a double bottom to hold off the rising trends is $101 a share. If we don't even get that low, the main support above that is going to be $103 a share. So these are the main levels I have for Amazon. Now switching over to Microsoft. Obviously, tech has been hot. I'm going to keep repeating that just so you guys, you keep understanding tech is hot right now. It's not going to stay hot forever, but you have to play trends and not go against them. You have to go with the market. Don't try and predict the double top. Don't try and predict the switch off from bullish to bearish. You want to wait for indications, whether it's trends forming, whether it's more selling pressure than buying pressure that you're noticing, but you want to wait for confirmation. Don't try and predict what you can't see yet. We don't know how much volume is still going to be pumped into the tech side. We don't know what's going to happen yet. So just going off levels, this is also going off, just like I've said with the last, basically every stock we've reviewed, levels from last Sunday's charting are all still in play. So when looking at Microsoft, the main resistance that we are still waiting on is that 112.5 a share area. 312, my bad. I think I said that wrong. The main resistance is 312.5 a share. Going off of that breakout, I will tell you what I personally would be looking at for the next resistance if we break 312.5 a share. You have to realize we have major gaps. All these wicks historically that we had a double bottom on at the all-time high, that's basically the zone that I'm talking about where this top resistance is that I have charted currently. If we're going off the next zone that we should be focused on, it's going to be roughly $320 a share on Microsoft. That's going to be basically a $7.50 fill per share price. Now, obviously, since we have the resistance gap fill, let's focus on what zones may hold on a pullback for support. If you go off the previous bull flag we had before the breakout on Friday, we had a lot of resistance in a zone for literally 5 trading days back to back. That is the main support we should be focused on. Anything that's resistance that breaks upside is now considered support. You don't want to take away this line only because, resistance broke, it doesn't matter no more. That's called a resistance to support flip. Price action is now above that zone and now acts as support. So we have to keep that for a pullback to hold with strength on buying power. So 307.8 area, $308 a share, anywhere in that zone, watch for a pullback and a hold. Outside of that support, the level below we have, I'm going to raise this up slightly since we can actually use Friday's low wick that correlates with the previous 5 to 6 trading days as support. The main support there is going to be $304 a share. Outside of that, obviously, if we break the 304 a share, which I doubt that's going to happen, we're going off the previous higher high on these trends right here. So we're focused on roughly $300 a share at that point. Just to recap this before I move on, main resistance, 312.5 a share. The gap fill above that will be $320 a share. I will zoom out just in case you guys are wondering, like, why am I saying that? That's the level I just charted earlier. And I'll make this, let's go yellow so it stands out a little bit better. And I'll turn this to orange. So first resistance, 312.5 a share. Gap fill above that would be 320 a share. First support on the downside contest is going to be $308 a share roughly. Support below that is going to be roughly $304 a share. If we have the gap fill break of that main consolidation, it's going to be roughly $300 a share at the downside. Now switching over to Netflix, which we did not talk about last week. I told you guys, if you remember, I didn't want to talk about this till I saw more movement. And sure enough, going off the daily, I want you to see this first before I switch back to the 4 hour. We are basically in a falling wedge, holding a new support. This could be billing for a breakout on the upside. That is why I want to talk about it this week, because if the market does stay bullish, Netflix had the earnings report. It was not as good as it should have been, but it still held with buying pressure at that 316 level I've been telling you guys about. 316 area has to hold support, and if 313 does break, we're going to see a major drop, probably back to the high $200 a share area, 290s, 285 area. As of now, we're holding with massive buying pressure. I have no doubt in my mind that this can break out on the upside, only because we are making lower highs on this trend, but you have to focus on the fact that buyers are not stepping away every pullback we get. So if this just continues to squeeze in this area of this falling triangle or the falling trends, this could shoot like a rocket to the upside. So obviously, just going off what I just said there, you should assume that I'm bullish on Netflix for this week. I will be watching Netflix on every pullback to try and catch calls around 313 to 316 a share. I want to see that zone hold as support. If buying pressure continues to step in, I'll be watching a breakout above 325 a share to fill the gap to 330 a share. If we break out of 330, which is obviously the previous lower high off these trends. But if you look back a few more days, it was also a double top. We've tried to break out above that level before and we failed. If we can catch buying pressure to break out above these two main resistance at 325 and 330 a share, the gap fill in the upside will pull us to roughly 338 to 340 a share, going off the previous lower high off this falling trend. So I'm looking at a gap fill on Netflix for this week. I'm not saying we're going to break out. Netflix is bullish, buy calls and hold. Don't even look at it. I'm looking for a dip before I chase. If this breaks out Monday morning, like we've seen Netflix run $10 at open, $15 at open, I'm not interested in chasing. If we break out upside, I will not play it. All I'll do is literally see how high it goes on the upside, and I will catch the pullback off the trends. As resistance break, I will catch the pullback for that to hold as support. That is what I will be doing. I'm not saying, oh, Netflix broke up to 327 Monday open, I'm going to buy it if it pulls back to 325. We could have a fake wick out on the larger frames. I'm not going to expect us to break 325, pull back and hold. I want to see consolidation. I want to see the candles hold above the 30-minute. None of this 5-minute candle crap. I want to see the larger candles on the time frames hold support if we pull back. I'm not going to chase Netflix. I'm not going to try and make a quick buck out of a quick candle play. I want to catch the move that I see coming on the upside. If we do break downside, obviously I will not chase puts, but I will not get puts if we push upside. I'm only focused on calls at this point. That's all I'm focused on. I will obviously watch the 316 support, 313 support. That's my area for buying calls on Netflix for this week. So switching over to NVIDIA now, just like every stock, hopefully this isn't getting annoying. I am not going to have to rechart. Everything is still in play. All I have to do for NVIDIA is add a resistance above, since we are in territory for a pullback and or a double top with the high we had Friday, Thursday, Wednesday, Tuesday. Basically Monday open was when NVIDIA had that push. So that's the main thing I'm focused on, is a reject, but I want to see supports hold. Basically everything I'm talking about, you should notice I'm leaning towards a bullish week. If we are bearish, I'm prepared, but I want to go off my first instinct and not have a two-sided mind going into the week. I want to be bullish only as of now. Obviously, we have data reports coming out, so that could sway the whole market, but I'm focused on the trends. I'm not going against trends just yet. I want to see if the market has strength to hold, because if we do hold and have buying pressure all around, there's going to be a massive squeeze coming only because of how SPY is looking right now. The S&P is squeezing on the trends on the larger side. There could be a massive move upside if everything is going good this week. So when talking about NVIDIA, I'm going to talk about the downside first, and then I'll chart for a resistance above this past week high that we just had. So obviously just going off these zones, the main support as of now is 285 a share, but the support that I'm focused on, 285 is nice if we hold that whoop-de-doo, but if I am trying to play calls on NVIDIA, I want to see the 281 a share level hold, only because of this historical double top that we had before the breakout. We've had a pullback before through that area, and we held roughly around 271 a share. So obviously going off these levels, you can see why I have specific stuff charted. The main support hold I want to see for a call entry is 281 a share. If we break 281, I see a gap filling down to about 271, 272 a share. The 263 support is obviously there just for visuals. I don't expect us to hit that this week, but I like to keep it there only because if that breaks, that is going to put NVIDIA into a heavy bearish sentiment. So I'm keeping that just for visuals. It's not there because it's going to happen. I'm going to switch back to the daily now and find a resistance above last week's high to see if we can find something. So obviously we can go off this previous high right here if we want to do a dead on candle. That will be roughly $290 a share. I'll put that there for now just so it's there so I can use it in the current price action timeframes. And I will make this, let's go purple for now. And I'm going to change the purple down here to blue just so it doesn't get confusing. So going off the all-time high zone area where we consolidate a lot, I'm on the daily right now. So I'm looking for multiple candle fills, multiple wicks that all correlate, and I want it roughly around or above that 290 a share. So when I'm looking at this, I see a lot of wicks right here. I also see multiple candle fills that correlate just in this one zone that was about, a week of buying in the market. I'm gonna chart that and use that level going off a pullback we had roughly around this area right here. It correlates roughly on pullbacks. There is a little bit of a gap up to about 293 a share. So we have a zone between 292 and 293 that's going to be very heavy if we push that high. So I'm going to keep a level at roughly 293, and I'll make this like a cayenne color turquoise area. I'm going to go back to the 2 hour and the 4 hour and look at the current price action just to get a feel for what I just did. Now we have a little bit more levels. This is what I'm focused on. Okay, we put this purple there. That was the previous high of the trends on the daily. That basically maps out the double top. So I don't really need to keep this purple level here. It's more so me understanding there's a double top in play. And if we break that double top, we're going to be focused on that 293 area for a reject. So the main gap fill is going to be 293 on the upside. Obviously, we have to break this double top that happened last week on Monday. And that's going to be roughly 290 a share, 291 a share. So the fill there is not very big. So I do see a lot of hesitation on NVIDIA if we don't break above with heavy buying pressure right away. That 291, the 293 area is going to be a heavy rejection zone. And if we do pull back, I will be looking at the 281 a share zone for support to hold if I want to get calls. So here's a stock that we have not charted before, I don't think on Sunday charting. This was recommended, and it's PayPal. So PayPal, according to the guy that posted this, has earnings tomorrow, and that is exactly what my Webull says, so that confirmation is correct. So PayPal has earnings tomorrow, and we've basically been zoning in this area for the past past 2 months, basically 2.5 months we've been zoning. So that's the first thing I'm going to chart on PayPal. It's just a rough area of the zone. I'm not looking at the bottom wicks and the top wicks. I'm just trying to get an average area of rejections. I will talk about why I put levels here once I get the color coordination going. So going off the support, many people will just say, oh, $71 a share. I'm going to put a level at the very bottom. Okay, I get that. We have a double bottom. We had a few wicks back here. I'm focused on the overall market sentiment with the most touches, the most wicks, whatever it may be for your terminology. And I'm looking at this area right here. anywhere between $72 a share and $72.50 a share. I'm liking this for a support if we dip. The reason I want to catch a little bit higher up is because we had multiple wicks, multiple candle fills, not just shakeouts. I'm not focused on the shakeouts. You shouldn't buy into a trade just because your level is touched. You want to see consolidation. You want to see candles hold. You want to see buying pressure. If we have a massive wick in the current timeframes past 71 a share, down, well, past 72 a share, pushing down to 71, 71.50, wait for that pullback for confirmation that this is going to hold off buying pressure. Don't just buy into calls because it touched the blue. Don't just buy into puts because it wicked below the blue. You're focused on strength. You're focused on the patience aspect of, is this really going to hold historically like it has? So I like to put levels where majority of the consolidation happens, not just wicks, not just candles at the very low in the consolidation zones. Same goes for the top one resistance. I'm not going to put a level way up here. I'm focused on overall touches, overall rejections that will lead me into watching carefully as those touch, not just, 78 a shares approaching. By that time, it's basically already broken out. Can it hold on a pullback now? So I want to see the first heavy rejections break out on the upside. We had major rejections here, another major rejection. We didn't touch dead on in this area, but the selling pressure was there before it even contested. When we do break above, it just pulls right back. So I'm not interested in that stuff. I'm focused on 77 a share as a reject. So here's our main two zones, one support, one resistance. Now from this point on, I switch back to the daily, and I'm trying to find more reasoning as to why I can add another level above resistance, maybe another level below support. With earnings approaching, though, I do expect finance and all these other tech stocks to be bullish. I'm not saying it's going to be a good report and PayPal's going to send on the upside, but going off the other earnings reports, it's more probability-wise for PayPal to send upside than the drop downside. We've been consolidating in these zones for literally a whole year straight for PayPal. Could this be the time we finally break out and have an upsend on PayPal price per share? So while I'm looking at this, what other zones, what other areas can I chart for a level above as resistance? I see a double candle here. As of now, it's my only confirmation I see for a level I can place in. So I'm going to put, just for visuals, a level right here to use and correlate that as I look back, look forward, and see if anything else correlates with that. So we had a slight pullback here on a filled candle, which means we opened up at the bottom of this green, closed on the upside. We had a few candles here with the fills, few wicks consolidation. And this also correlates with a few other wicks that tapped out there. Now going off the 78.6 area I put in there for visuals, we can use that going off historical to see if there's any correlation from this past 2 months consolidation. And sure enough, we have a nice reject here before the zone started to form. 2 days back to back of a double top rejection. If we go forward a little bit more, we can use that on a wick that I told you earlier. I don't want to chart this until I know. This wick was very heavy, and it's not a dead point up here. It's a zone. So we have another zone between 78.7 to $79 a share. I'll keep a level there and make this yellow. So PayPal obviously is consolidating. I don't trade PayPal. I'm just charting it as I see it. If you guys have questions or your own personal statements that you see as well, please speak up. Please type like, hey, what about this price on the PayPal shares? What about this level on PayPal? This is what I see from my personal visual, like what I see, my eyes. You could also put another support here if you want. There was a lot of bounces within the zones, but I don't want to keep it too small. I want to see a major pullback that makes me get in calls. I don't want to try and predict a slight pullback that may be weak and then drop lower the next few days. Obviously, earnings is tomorrow, so this may not even have a pullback. It may just send. You never know, but you want to prepare for both ways. So just going off how I chart, my only support and my main support is going to be roughly $72 a share. My first resistance will be $77 a share, and the breakout resistance level is going to be around $78.6 to $79 a share. If earnings sends us above both of these resistance zones, I would not be surprised if we fill the gap roughly up to $85 to $88 a share that will fill this upside. Outside of that, I don't have much more to say. I'm not familiar with PayPal very much on their chart setup or their like how buying and selling works. I don't know how much it moves in a day. I don't track it very closely. So I'm only going off market sentiment with chart setups. So I hope this gives you a good visual. I hope this gives you insight as to what could happen. But these are the main three levels that I see. 72 is support, 77 is the first resistance, and 78.6 to $79 a share as the breakout level for PayPal. So I'm going to come back to SPY at the end. I switched over to Target, TGT. We also have not charted this, I don't believe, on a Sunday night charting session. So just like every other stock, I'm going to start on the daily and just get a feel for where it's currently at based off historical price action movement. So looking at Target on this zone, obviously we've been sitting with basically up, down momentum. There hasn't been much of a breakout, hasn't been much movement that has pushed it downside or upside with any buying or selling pressure. But just going off what I see on the daily, I'm trying to find major zones on support and resistance that I can use and then gauge the market on a smaller frame with the 4-hour or the 2-hour. First with the resistance, I see a nice level roughly around 173. Yeah, this is someone just said that's a crazy gap. Yeah, it's definitely, I mean, it was obviously an earnings drop off. I can tell just by looking on the daily. And at that point, we've just been hovering and consolidating. If I switch to the weekly, looks about the same. There's not much going on here. Kind of higher lows forming, but also basically the same double top, triple top on the weekly. It's looking pretty bearish, honestly. So I'm going to switch to the 4-hour now for Target and just see what I can find within these two main zones that I just charted. If we're going off the smaller frames, basically we're at a double bottom with Target right now, trying to find a support that can hold to push us higher upside. It's not looking too strong. Just going off this area right here, we're kind of forming lower highs. So are we going to keep respecting this trend line? Can we break above and hold? But at that point, you have to realize we had a lot of bounces here as support that's now going to act as resistance in the current price action. So we have a nice level here at 160. The main breakout gap fill is going to be roughly 173. But since that is super high up there, I want to pull this down to the next resistance after 160 a share, which I see at roughly 164 price per share. I'll make this yellow just so it's a different color. As I'm talking about Target, we have about 20 minutes left, and I have 2 more stocks to review. So type any other stocks you would like me to look at, any other questions you guys may have that may not even be related to the charting, anything you guys want to know, even if it's like a personal question to me as a trader, please type that because we're going to have extra time at the end of this. So with Target right now, the main support that I see is roughly 153.5 a share. If we break out on the upside, this is the main trend I'd be watching. We have a resistance at 160 a share, and then the resistance above that will be 164 a share. I'm not too interested about charting higher than 164 a share since we don't move very much with Target in a day or in a week. So this will mostly be monitoring how it moves throughout the week while we have CPI, maybe other earnings that could persuade Target if we have Walmart or anything else in the retail area. The consumer staples. My bad, I couldn't think of the name. The sector Target, Coca-Cola. We're focused on consumer staples to make this retract if there's another earnings report that may be in that sector rotation. Outside of that falling trend, I don't really see much going on with Target. If anyone sees a level I may not have spotted, please speak up and let me know. But there's not too much to talk about with this stock. It's looking bearish. If we can break above that falling trend, we obviously have the first gap fill of resistance at 160 a share. So there's not too much that I would be worried about missing if I'm not trying to catch the major move on Target. It looks like it's still trying to load a new higher low on the support. It's also making lower highs on the daily as well, though. So we're basically stuck, I would say. Target hasn't really made a major move to break out of this. I see more downside than upside, but if the 153.5 a share support can hold, I do suspect this to bounce and possibly break out to the 164 a share level. So these are the main 3 levels I see. And I'll repeat this one more time. Focus on this falling trend of this lower high forming. We have to break out before we have any conclusive of a bullish setup on Target right now. So switching over to Tesla, obviously a lot of people love to chart Tesla. I am not a big fan of trading Tesla, but I will give you my insight and I'll let you know what I see. Going off the last week's charting, I still have the 175 a share as a resistance, so I'm not going to change that. I am going to raise my support to what we broke out of this past week to 165 a share area. That is my first support on a pullback. We closed on Tesla at 169.99 a share. So the first support will be 165 a share. My next support will be where the blue previously was, which is roughly 161 a share. So those are my main two supports that I have on Tesla. Looking at the upside, obviously we're showing a support. We're showing buying pressure. Tesla had a massive end of the week on Friday. Huge push. It was a nice uptrend. It looked like it had nothing but green on the 4-hour. So at this point, can Tesla pull back? If it does, we're looking at 165 a share as that first support, which also goes back to this bottom that formed before the push, just like we currently had. So we made a lower low on the larger frames. We're showing buying pressure. We're breaking above the previous lower low. We held that support. If we pull back, will we hold it for a second time? That's the main question. If we do break 175 on the upside for Tesla, the next resistance I would be focused on is roughly 180 a share. I put it at 180. I did that quick. Off of visual, I can see what's going to be happening. We had this area form as a resistance. Previously, before that resistance, we had support holding it up. If we go closer to the current time frames, we rejected 180 a share. Once we broke above 180 a share, we pulled back and basically held support for 2 days back to back. It wasn't a dead on 180 a share hold, but it was enough to keep it above that zone. As the days went on, 180 respected as support before the breakdown happened. So at this point, the 180 will be the gap fill if we can break 175.4 area as a resistance. CJ just said, can you look at Roblox too, please? I'm looking for an after earnings play, mainly studying how stocks move after the earnings report. I will definitely look at Roblox right now, actually, because I do want to save SPY for last, and we have about 16 minutes left, so this will be a good timing. Let me delete one of these so I can add it easier. RBLX. Roblox is a good stock for anyone that doesn't trade it much and moves quick. It also is pretty cheap, if I remember right, compared to stocks like Tesla, Microsoft, Nvidia. Roblox is a nice stock that can move pretty heavy if you catch it at the right time. So I've not charted Roblox, as you can tell. I don't trade it much, but I used to when I had the bull run up to the 140 a share area. Since then, it's been basically down in the 25 to 35 a share area. So right now we're hovering. I'm going to try and find a first support off this. And it looks pretty nice right here, actually. CJ just said it is cheap with great volume, delta, theta, etc. That is one thing that I guess has translated since I used to trade it a few years back. So I'm glad it still has that going for it. Looking at the main support, obviously, I'm focused on multiple wicks or days. Here's a good zone right here. Also, resistance historically, tried to reject a few more times, held as support, and that's where we currently held on the current price action. So the first main support I see is roughly, I'd say 33.5 a share. I will make that red. So we're holding support as of now and trying to curl. At this point, I'm trying to find a resistance, going off either trends of lower highs, maybe historical analysis that can give me a reasoning behind as to why it's pushing and where it will reject. First thing I'm focused on for a reject is the previous lower high, which is roughly 36.5 a share. I'll make this orange. Going off that, I'm going back now to see, has this historically held on other price actions throughout the year historically? We held support well here. We had a lot of consolidation in the middle, but we can also add another resistance above that 36.5 a share. So now we have two resistance, one at 38, one at 36.5. I'm only going to keep it at those two, only because if I pull this back, look how this zone respects compared to this zone back here. It's all correlating. Does this 38 a share also respect anything in the current time frame? there's not much going on here. But if we pull back to here, we had nice support around this area. I always tell you guys when you chart, well, I shouldn't say you guys, when I chart support and resistance, I'm never focused on to the decimal, 38.04, 38.12. I want a rough area. Going off these resistance, I can pull this up to match more candles on the upside, which also gives the price action in the current time frames room to grow and push higher without you chasing or trying to predict predict puts on a rejection. This gives you more patience in your favor for it to push upside with heavier price action. So now my zone is roughly at $39 a share, and that does correlate to a support that held back here, along with consolidation that rejected as resistance. So now we have a clear view, more gaps to fill, more time for you to wait and let the chart do its thing. Main support on Roblox that I have is 33.5 a share, first resistance being 36.5 a share, and then the gap fill basically being $39 a share. If you want the last level above 39 a share, just use the previous rejection before the downside happened, and that's roughly $42 a share, 41.8 area to be more precise. Outside of these three resistance, I don't see much to look at. Roblox could also form a cup and handle if it has buying pressure as this curls and pushes. So Roblox could be a good play in a few weeks, maybe a few days, depending on how heavy it does push. But I do like how this is forming. If we touch 41.8 a share, we could pull back, form that little cup on this cup and handle, then rip after contesting 39 a share and break upside. So I personally will not watch this right now. You could easily catch the curl of the cup forming. I like playing the cup once it starts to actually get halfway there, and then I can play pullbacks because a lot of the time, these setups do take a few days to actually get that buying pressure to push it upside. It could consolidate a lot, try and push up, pull back, try and push up again, pull back. I want to try and catch it once I notice the switch from light buyers to heavy buyers, with also every pullback being bought up with more volume. So just to recap before I switch over to SPY for the last 10 minutes, major support on Roblox, 33.5. First resistance will be 36.5. Next resistance above will be roughly $39 a share. The main gap fill on this smaller frame for Roblox will be roughly $42 a share. So now switching over to SPY, I'm not going to try and go into much depth with this since I know Rippy God does talk about SPX a lot before pre-market, and that's the main thing he trades. SPX and SPY do correlate, but I will give you my personal analysis that I see throughout the week that is coming. Perez just said, please do. So most of my analysis, I would not say is 100% correct. It's just a good rough estimate of what I feel is going to happen. It gives me more patience when I have wide gaps on the charting. When looking at the support I posted and charted last Sunday, I had roughly 402.5 a share for a main support hold. We didn't drop all the way down to that level, but we did hit at a double bottom at roughly 403.8 a share. So at this point, I will raise this support to hit this double bottom. So now my main support is 403.8. At this point, I'm focused on the upside now. Where and when could this reject? Or if it doesn't reject, where is it going to have the breakout and then the rejection zone? My resistance levels still stand as is. First main rejection is going to be 416 a share on SPY. If we break or at least contest and pull back that zone level, I am focused on support holding at 412 a share. So main rejection, 416, pull back to hold support, 412. If we break out SPY, because we do have data releases this week, watch the gap fill to 422 a share, roughly 420 to 424. Going off that, that's obviously the previous lower high off the trends right here. If we break out of 422 a share, roughly 422 to 425, there will be a massive squeeze on SPY. If you want to use the rising trends, if you want to use the zones off previous lower highs when the all-time high was formed back in early 2022, I'm focused on the gap fill that will roughly bring SPY to 430 to 435 a share. I also would not be surprised if we tap out on SPY in the next weeks, the next months, however long it will take. I'm focused on that 440 a share zone. I would not be surprised if SPY touches 440 before we have that next leg down to the 300s again. So at this point, I will recap what I just said, just for people that they just want to hear levels. They don't care about the analysis in between. The main support on SPY, 403.8. The first resistance on SPY is 416 a share. If we push the 416 and pull back, I'm looking at a support at roughly 412 a share. If we break 416 resistance and keep pushing, I see a reject coming at roughly 422. If we break 422, the gap fill I see is roughly 430. And I'll put a level there just because it goes with the trends. It'll make it easier to see. 430 is my gap fill if we break 422. Realize we have to touch 422 first. We have to break 416 with buying pressure. But this is my analysis and what I'll be looking at for SPY this week. Does anyone have any questions, any comments, last minute stocks they want me to pull up real quick? Maybe you want me to go back and talk about a stock that you may want more information about. Now's the time to basically ask away. And if there are no questions, that's also fine. I just want to give you guys a chance to speak your mind, ask questions while you can. So I'll wait a few seconds to see if anyone has anything to type up. And if you guys don't, class is basically over unless other people have stuff they want to bring up. So don't feel like you have to stay in here the last few minutes. I'm just giving this a chance for people to basically ask away. Maybe you have questions for me as a trader. I know it's a charting class, but don't be scared to ask stuff that you feel is not associated with levels. Maybe it's like my style of trading, what I'm personally watching this week. Don't be scared to ask. There we go. Someone just said it. So my watch list this week, my main go-to stocks, which I want to mention this first because it will basically give you an idea of how I trade and what I like to trade the most. I am a huge follower of Amazon, Netflix, and then SPX. Those are my main three go-to. Obviously, I talked about Netflix the most for a breakout. I'm very bullish on it. So I'm going to be watching Netflix very heavy this week, only because I want to see this breakout happen on the upside. Outside of Netflix, I want to see if Amazon can continue to hold support, if that can push higher on the upside after the earnings pulled it down. I would not be surprised to see Amazon slowly curl back up if the market is also bullish for correlation purposes. So those are my main two I'm watching: Netflix, Amazon. SPX I always watch. I like to trade that end of the day. I like to use that for overall market sentiment as well. So outside of the main stocks, Amazon and Netflix, I don't have anything else I'm really watching that heavy. Anything else from anyone? Any question at all? There's no limitations as to what you can ask right now. It looks like that may be it. I'm going to give it a few more seconds, and then I'm going to stop the recording just to talk with you guys on a more personal level. I think that's it. Let me